Picture this. It's 1985. A powerful executive behind a mahogany desk wants to send a message to a client. He dictates it to his secretary, who types it up, hands it to the mailroom, and 3 days later, it arrives. He wants to send money. He writes a check, mails it, and waits a week for it to clear. You walk into that office and tell him that one day you will be sending that message yourself, instantly, to anywhere on earth, from the palm of your hand. And the money, that'll go faster than the message. One tap and done. He laughs you out of the building. Fast forward to 2026, we are living in the age of AI. You can generate a business plan, compose a symphony, and diagnose a medical condition from your phone before breakfast. Money moves in seconds. Messages, they move in milliseconds. And yet, the stock market is still closing at 4 p.m. New York time. You still need a licensed broker to participate. Settlements take a full business day. If you're in Singapore and want to buy Apple at midnight, you wait. If you want to use your shares as collateral somewhere else, you're locked into one brokerage's walls, and there is nothing you can do about it. In the age of AI, stock trading is still writing checks. And that is about to change. Quick programming note. My co-host, Zubin, is in New Zealand, selling payments orchestration to 5 million of the nicest and currently the most forlorn people on earth. Why, you may ask? Well, the answer lies in Bumrah's Yorkers and the cricket T20 final this weekend. You know if you know. He's unreachable, so today you've got me. Yesterday, NASDAQ partnered with crypto exchange Kraken to build what they're calling an equities transformation gateway. Here's what that means in plain language. Your Apple share, your Tesla share, your S&P 500 ETF, tokenized on a blockchain, trading 24 hours a day, 7 days a week, settled in seconds, carrying the same exact voting rights and dividends as the original. Not a synthetic, not a derivative. The real equity running on completely new rails. Instant, fractional, always on. The same asset, just different infrastructure. Entirely different world. And 4 days before that, Intercontinental Exchange, the parent company of the New York Stock Exchange, invested in crypto exchange OKX at a $25 billion valuation. The title sponsors of McLaren and the Australian Grand Prix had a tough weekend in Melbourne, but a historic one in New York. Two of the most powerful financial institutions on the planet acting independently in the same week, making the same call. That's not a trend. That's not experimentation. That is a verdict. And the rest of the industry knows it. One important caveat, X stocks aren't available to US investors yet. And NASDAQ's design doesn't go live till 2027, pending SEC approval. This is real infrastructure being built in real time. But if you're watching this from the US, you're watching from the outside for now. That changes, and we'll get to exactly when. Now, this has been tried before, and it failed. Australia's stock exchange, the ASX, announced in 2015 it was replacing its entire infrastructure with blockchain. 7 years, $250 million, lots of global attention, and then on November 2022, scrapped. All of it, written off. The ASX wasn't alone. Some exchanges have cracked instant settlement in certain products. A few have experimented with extended hours. But nobody, not once, has delivered instant, fractional, and round-the-clock trading all together. Always one dimension, never all three. The ASX made the classic mistake of trying to replace live system. You can't renovate a live airport while planes are landing. Every broker, bank, custodian, and regulator had to migrate simultaneously. The complexity was unimaginable and it collapsed. What NASDAQ has done differently is philosophically simple, but operationally it's brilliant. They built a second runway alongside the existing one. Traditional markets keep running exactly as before. The tokenized layer runs alongside. Assets move between both worlds seamlessly. The old infrastructure stays intact for those who need it. That's not a technology upgrade. That's a design principle. Build alongside, not instead of. And it's precisely why this is the first clean triple jump in markets history, when everything before it only ever managed to stumble. I know what some of you are thinking. Isn't this just Robinhood? Don't I already have Apple shares on my iPhone? No. And the distinction matters more than you think. Robinhood gives you access. This gives you freedom. They are not the same thing. On Robinhood and every traditional brokerage, your share lives inside their system. You cannot move it. You cannot use it as collateral in another protocol. You cannot trade it at 11 p.m., say on a Sunday when news breaks out of Asia. You are a guest in their building, under their rules, during their hours, subject to their outages. A tokenized share settles instantly. It trades continuously and works as collateral across multiple platforms simultaneously. It's programmable, my favorite word, which means it can interact with financial applications that don't even exist yet. The retail trader in Manila, the pension fund in Oslo, that family office in Singapore, all running on the exact same infrastructure as the institution on the floor of the New York Stock Exchange. Not cheaper fees, not confetti when you tap and buy, equal everything. Here's what most financial journalists are getting wrong this week. They're covering these stories as separate news items when they should be reading them as chapters of the same story. 3 things happened within 5 days of each other. Put them side by side, and you stop seeing a news cycle. You start seeing infrastructure being assembled in real time. March 4th, Kraken Financial becomes the first crypto company in history to receive a Federal Reserve master account. Not a fintech charter, not a banking license, a master account. Direct access to Fedwire, the Fed's own interbank payment system. The same rails JP Morgan settles on, the same rails Goldman uses. For the first time ever, a digital asset company sitting inside that infrastructure, not adjacent, not partnering with a bank that has it, inside it. Then March 5th, Intercontinental Exchange invests in OKX, New York Stock Exchange parent, backing a crypto exchange with an explicit plan to tokenize New York Stock Exchange listed equities on their platform. Fast forward March 9th, yesterday, NASDAQ announces the Equities Transformation Gateway, built on Kraken's X-Stock infrastructure. Kraken, the same entity that 5 days earlier had secured direct Federal Reserve access. Connect those 3 dots, tokenized equities settled through X-Stocks. X-Stocks inside the company with direct Fedwire access. New York Stock Exchange parent building the same capability through a different partner. That is not a product launch. That is infrastructure convergence, the kind that takes a decade to build quietly and just 1 news cycle to announce. The plumbing just got connected. Most people didn't even know there was a pipe. There's one more layer underneath all of this, and it's the force that made everything else move. Tokenized equities needed a settlement layer, something that carries value between blockchains, between jurisdictions, between the institutional world and the open, decentralized one. That asset is a stablecoin. In 2025, stablecoin transaction volumes surpassed Visa. The rails that digital dollars travel on are now larger by volume than the rails that the card payments travel on. And now equities are following money onto the same rails. The Genius Act, signed into law in 2025, gave stablecoins their federal regulatory framework. That wasn't the finish line. It was the starting gun. The moment implementation lands in early 2027, stablecoins don't just settle crypto, they settle equities, they settle bonds, they settle everything. The clearinghouse model, the gateway of global settlement for decades, starts losing its monopoly. This is not crypto going mainstream. This is crypto becoming the infrastructure of mainstream. There is a difference, and that difference is permanent. The plumbing of global finance is being rebuilt in real time. Most people will notice it in 2030 and assume it happened overnight. It didn't. It happened this week. The mailroom didn't die when emails launched overnight. It died when every executive quietly stopped using it, one by one, without announcement, without fanfare, and without a single press release. Just a better option. Take it. No ceremony, just the slow, irreversible accumulation of obvious choices. That is what's happening right now to your broker. When Zubin resurfaces, payments contracts signed, Kiwi hearts gently mended, Bumrah's Yorkers diplomatically left unmentioned, we'll do a full deep dive on the main show. Regulatory picture, profile implication, scenarios for 2030 properly modeled out. But in the meanwhile, subscribe, ring that bell, and if you're in Auckland and somebody's been trying to sell you payments orchestration software over this week, give him a meeting. He's earned it. I'm Aman. This is A2Z FinTech. Stay curious and stay purposeful.
This is A2Z FINTECH.
Actually, got one more thing. While we're on the subject of legacy infrastructure being dragged into the modern era, in India, you can split a restaurant bill with a QR code you've been scanning since 2016. In China, street vendors in rural villages, they could take WeChat Pay. Across Europe, instant bank transfers, table stakes. You tap it, it moves, it's done. In the United States, this capital of financial innovation, you still hand somebody a piece of paper with your bank details printed on it and wait 2 days for it to clear. FedNow launched in 2023 with enormous fanfare and is still quietly struggling with adoption. The banks aren't in a hurry. The incentives aren't aligned. The urgency isn't there. The stock market just got its internet moment. Payments in America are still waiting for theirs. Zubin might have something to say about this, but he's busy in Auckland.